Hello everyone, this is Joshua Smith of Apollo's Artifacts. It is April 2018. So I thought we would start looking at a project I've been working on, trying to figure out what maybe states and cities or even counties are the most libertarian friendly. Now, some of you may be aware that the Cato Institute, for example, puts out studies similar to this, where they end up ranking, say, a top 5 and a bottom 5. You can find videos on that, which I will link below so you can watch those. I have a little bit of a disagreement with them in the way that they rank their highest states and cities. But basically with the bottom 5, I largely agree. I think maybe we only have 1 or 2 states that are different there, but ultimately the big blue states of New York and California, of course, do not come out very well, and I agree with their rankings and putting those as the bottom 2. Those 2 states turn out really poorly in terms of freedom indices by various measures. They're really bad in terms of income taxes. They're bad in terms of local taxes. They're bad in terms of city taxes. I mean, there is just a litany of problems with those. So I thought that the best way to begin would be to start off with the Tax Foundation's report that they put out annually on state and local sales tax rates. This one came out January 31st, 2017. I think that the measures are still largely accurate and relevant. The authors were Jared Walzak and Scott Drinkard. Among their key findings, they point out 45 states in the District of Columbia collect statewide sales taxes. Local sales taxes are collected in 38 states. The 5 states with the highest average combined state and local sales tax rates are Louisiana, Tennessee, Arkansas, Alabama, and Washington. Sales tax rate differentials can induce consumers to shop across borders or buy products online, and that is a phenomenon that I've mentioned before and 2 other recordings that I've done like this. So they begin, retail sales taxes are one of the more transparent ways to collect tax revenue. Sales taxes are easier to understand, and consumers can see their tax burden printed directly on their receipts. Overall, they typically judge these to be better forms of taxes than income taxes. In addition to state-level sales taxes, consumers also face local taxes in 38 states. The combined rates. 5 states do not have statewide sales taxes. Those are Alaska, Delaware, Montana, New Hampshire, and Oregon. Of these, Alaska and Montana allow localities to charge local sales taxes. So when we take a look at state rates, we find that California has the highest state-level sales tax rate, which is 7.25%. 4 states tie for the second highest statewide rate at 7%, Indiana, Mississippi, Rhode Island, and Tennessee. The lowest non-zero state-level sales tax is Colorado, which has a rate of 2.9%. 5 states follow with 4% rates, Alabama, Georgia, Hawaii, New York, and Wyoming. And libertarians are often fond of pointing out the ways in which, and actually some conservatives get into this also, is pointing out how these tax rates can create competition, not just among states, but among cities for business and for people to come and live there and whatnot. So under the section called the role of competition in setting sales tax rates, I also noted to the side here that John Stossel has a really good video on this that you can watch. I will link that below. It's called How Money Walks. And then he has another one called Taxed to Death, where it tracks all of the taxes that we are ordinarily subjected to, and especially him, I think, in New York. But we begin here. Research indicates that consumers can and do leave high tax areas to make major purchases in low tax areas, such as from cities to suburbs. For example, evidence suggests that Chicago area consumers make major purchases in surrounding suburbs or online to avoid Chicago's 10.25% sales tax rate. The state of Delaware actually uses its highway welcome sign to remind motorists that Delaware is the home of tax-free shopping. A related aspect of this, they also have a section where they track how much of a particular product's product chain itself is taxed throughout the process of putting it together. And that can be really punitive if a state has what is called a very broad base for that. So it seems, according to their study, Hawaii has the broadest sales tax in the United States, but it taxes many products multiple times along the way of being constructed or put together. By one estimate, ultimately, Hawaii taxes 99.2% of the state's personal income. This base is far wider than the national median, where the state sales tax applies to only 34.46% of personal income. The Tax Foundation also issued another report in 2017, this one in October, related to sales tax rates in the major cities. This was authored by Jared Walczak again, Scott Trinkert again, and Raymond Roessler. They label here their key findings. There are roughly 10,000 sales tax jurisdictions in the United States with widely varying rates. Among major cities, Long Beach, California, and Chicago, Illinois impose the highest combined state and local sales tax rates at 10.25%. 4 other cities, Birmingham and Montgomery, Alabama, Baton Rouge, and New Orleans, Louisiana, rank next highest with 10% combined tax rates. Research demonstrates a rise in cross-border shopping and other avoidance efforts as sales tax rates increase. Sales taxes in the United States are levied not only by state governments, but also by city, county, tribal, and special district governments. In many cases, these local sales taxes can have a profound impact on the total rate that consumers pay. They point out that sales tax avoidance is most likely to occur in areas where there is a significant difference between 2 jurisdictions' sales tax rates. Their research indicates that consumers can and do leave high tax areas to make major purchases in low tax areas. They go from cities to suburbs. For example, strong evidence exists. Mark that section. At the statewide level, businesses sometimes locate just outside the borders of high sales tax areas to avoid being subjected to their rates. State and local governments should be cautious about raising rates too high relative to their neighbors, because doing so may lead to revenue losses despite the higher tax rates. And yet they continue to stupidly do so. Chicago is rather famous for this. I think the state of Illinois in general has been rather infamous for this lately. And they are also losing population as a consequence. And based on that, it should be no surprise at all that some of the big blue states, such as California and New York, are losing population. Some of the big blue cities are losing population. And very often these people are moving to Texas and Florida, where they unfortunately end up voting in many of the similar policies, because they vote in politicians with similar mentalities. And then those places are also on the path to the similar big blue destruction that reigns in other places. So in that vein, I think we can move on to take a look at personal income taxes. We can look at some of the best places and some of the worst places for income taxes. I have a study here. This is put out actually by TurboTax. So they list personal income tax top 10. And they say that each of the states below has a personal income tax floor, deductions, exemptions, credits, and varying definitions of taxable income that determines what a citizen actually pays. The 10 highest income tax states according to this ranking. Here we go. California, 13.3%. Oregon, 9.9%. Minnesota, 9.85%. Iowa, 8.98%. New Jersey, 8.97%. New Jersey comes out bad in a lot of these rankings, by the way. Vermont, 8.95%. Washington, D.C., 8.95%. New York, 8.82%. Hawaii, 8.25%. And Wisconsin, 7.65%. But among the states with the lowest personal income tax rates, there are 7 that have no personal income tax. That would be Wyoming, Washington, Texas, South Dakota, Nevada, Florida, and Alaska. Tennessee and New Hampshire limit their tax to interest and dividend income and not from wages. Among the states that do tax income, Pennsylvania's 3.07% flat tax ranks the Keystone State as the 10th lowest in the nation, to barely nudge in there. That's pretty nice for them. When we move on to take a look at the most expensive property tax counties, we'll find out perhaps to the surprise of some, but certainly not to people who live in New Jersey, that all 3 counties are in New Jersey. Passaic County, Essex County, Union County, all with more than 8.13% added on. However, if we go to look at Louisiana, they divide theirs up into parishes instead, and These have the least expensive spots for property tax as a percentage of income. That would be Grant Parish, Assumption Parish, and Vernon Parish. And then when we move on to the highest in terms of combined sales and income tax, we have New York at 12.7%, Connecticut at 12.6%, New Jersey 12.2%, Illinois at 11%, and California and Wisconsin also tied at 11%. Also, in terms of county property taxes, it should be no surprise again that New York City and the surrounding suburban areas have among the highest property taxes surround the biggest cities. It says here the highest property taxes in the country are Westchester County, New York at $9,647 annually. And the lowest property taxes, that would be 24 counties came in with less than $250 a year, and almost all were in the states of Alabama and Louisiana. Also have here another very good study. This is from 24/7 Wall Street in association with the USA Today. It's called States Where Americans Pay the Least and Most in Taxes by Evan Coman and Thomas Froelich. This was released February of 2018. And they point out in this report that it's called Facts and Figures 2017, How Does Your State Compare? And this was based upon research from the Tax Foundation. These tax burdens do not include the federal taxes paid by all Americans regardless of state. In addition to federal, state, and local taxes, Americans pay taxes to other states. Out-of-state visitors pay sales taxes as tourists. Investors pay capital gains taxes on the investments in other states, and drivers filling up at gas stations in other states pay those states' excise taxes. For this reason, the tax burden is not always a perfect reflection of the taxes actually collected. And they have these ranked from best to worst. I'll just cover a portion of these. We'll start off, number 1 is Alaska. Taxes paid as a percentage of income, it's 6.5%. The income per capita is about $55,000. Income tax collections per capita, 0, tied with the lowest. Property tax collections per capita, $2,600. General sales tax collections per capita, 0. Number 2 would be Wyoming. Then South Dakota, Tennessee, Louisiana, Texas, New Hampshire. And that's as far as we'll go with that. Then we'll take a look at some of the bottom states here. And that would be number 36 is Pennsylvania, for example. Taxes paid as a percentage of income is 10.2% overall. The income per capita is about $50,000. Income tax collections per capita about $900. Property tax collections per capita $1,400, and general sales tax collections about $800. Below that is Hawaii at 37. You have Vermont at 40. Then we'll take a look at the bottom few here. And it's a fairly predictable list. Number 46 is Illinois. Taxes paid as a percentage of income, 11%. Per capita income is about $52,000. Income tax collections, $1,200. Property tax collections, about $2,000. General sales taxes, about $700. Then you have California at number 47. New Jersey, number 48. Connecticut at 49. And, of course, New York dead last, the least libertarian-friendly place. And, of course, the tax structure is just one of the sets of categories that libertarians would be interested in. So that's the only thing that I'll be covering in this one for now. And others, I'm going to look at a freedom index ranking. We'll also take a look at how states rank in terms of integrity of their judicial systems and government systems and whatnot. We'll also take a look at happiness indexes or indices, health indices, and corruption perceptions index. That one's kind of interesting also. That's all we have for today. Please thumbs up, subscribe, share, and all that good stuff. Thanks.